Hello everyone, my name is Nikhil Muva. Welcome back to this channel. In this video, we will discuss registration of transfer of shares in Indian insurance companies. The transfer of shares in an Indian insurance companies will take place as per the requirements under IRDAI Registration of Indian Insurance Companies Regulations 2022. The insurer can transfer his shares to the transferee provided the conditions specified under the regulations and the Insurance Act 1938 are met. For the purpose of the transfer of shares, the Indian insurance company are required to obtain the approval of the authority before effecting it. The present video will discuss in detail the relevant provisions under the regulation and the Insurance Act 1938 and further discusses the procedure for obtaining the authority's prior approval. Before discussing the procedure, we will first discuss the relevant provision for transfer of shares under the Insurance Act 1938 and IRDAI regulation. The relevant provision under the Insurance Act 1938 and IRDAI Registration of Indian Insurance Companies Regulation 2022 are Section 6, Clause 4, Subclause B and Regulation 6, Clause 3, Subclause 3 and 6, Subclause 10 respectively. According to Section 6, Clause 4, Subclause B of Insurance Act 1938, the public company carrying on the life insurance business cannot register its share transfer. However, such transfer can be made after the approval of the authority in the given situations. The transferee shall be required to furnish a declaration signifying the manner of holding the share. The total paid up holding of the transfer in the company shares exceeds 5% of its paid up capital. The total paid up holding of the transferee in the company share exceeds 2.5% of its paid up capital where the transferee is a banking or investment company. The nominal value of the shares transferred by any individual, firm, group or constituents of a group or body corporate under the same management exceeds 1% of the insured's paid up equity capital. Regulation 6, Clause 3, Subclause 3 allows registration of the transfer of shares of special purpose vehicle with the authority's prior approval. Whereas in Regulation 6, Subclause 10, the insurance company cannot register the transfer of its shares which will result in the change in the shareholding in the situations where the transferee's total paid up holding in the insurance company shares exceeds 5% of its paid up capital. The nominal value of the shares transferred by any individual, firm, group or constituents of a group or body corporate under the same management exceeds 1% of the paid up equity capital of the insurance company. However, such a transfer is liable to get registered if the authority's prior approval is obtained. Now we will discuss the procedure for obtaining the approval of the authority. The procedure for obtaining the approval of the authority in case of transfer of share is as follows. The first step in the process is filing application before the authority. The application shall be made by the company before the authority in a specified manner and it shall consist of the following documents: details of the transferor and transferee, complete details of the proposed transferee, financial strength, source of funds and any other information. For the purpose of filing the application, the declaration shall be obtained from the proposed shareholder which determines whether the proposed shares are for his own benefit or as a nominee. Further, the certificate shall be obtained from the SEBI registered Category 1 merchant banker which will certify the fair value of the insurer's share. In the last process of filing application, the processing fee of ₹1 lakh and the taxes shall be paid by the applicant. The second step in the process is due diligence. The authority, after receiving the application, performs due diligence on the transferee before granting the approval for registration of transfer of shares. The third step in the process is conditions for approval. After satisfaction, the authority approves the registration of the transfer of shares. The authority, while approving the application, can impose the following conditions for the transferee. It can impose lock-in period under Regulation 6, Subclause 1 of IRDAI Registration of Indian Insurance Companies Regulations 2022. It can order for infusion of additional capital in proportion to company's shareholding. It can order for compliance with all the conditions mentioned in the R3 certificate. Now we will discuss the process of transfer of shares in case of listed insurance company. The transfer of shares in the case of listed insurance company shall be done in the following ways. In the case where there is a transfer of 1% to 5% of the paid up equity capital of the insurer, the person willing to transfer paid up equity capital of the insurer shall file a self-certification of the fit and proper criteria of the acquirer with the insurer. Such filing of self-certification will act as the deemed approval of the authority. However, the transferor is required to inform immediately to the insurer upon execution of the transaction and is further responsible for compliance with any transaction. in the case where there is acquisition of 5% or more paid up equity capital of the insurer. The acquisition increases the aggregate holding of the person to 5% or more of the insured's paid-up equity share capital, then such person shall have to take prior approval of the authority. Further, if there is a subsequent acquisition of shares of the insurer to the mark of 10%, then there is no requirement of obtaining the authority's prior approval. In case if the proposed acquisition or aggregate holding of the insurer is proposed to be less than 5% and there is suspicion by the insurer that a dubious method is adopted to get above 5% to defeat the real purpose to acquire the controllable interest in the insurer, in that case the insurer can make a reference to the authority and the authority may pass an order which will require the shareholder to comply with the due diligence and meet the fit and proper criteria requirements. Now we will discuss what is the determination of the extent of transfer. The determination of the extent of transfer of shares shall be done in the following ways. First is the transfer is executed in favor of one or more parties through single or multiple transactions to the tune of 1% or 5%. In such a case, the cumulative transfers made during a given financial year will be considered for calculating the amount of transfer or acquisition. Second is transfer is executed with the transaction of more than 5%. In such a case, the entity shall take prior approval of the authority for calculating the amount of transfer or acquisition. Now, we will discuss the reporting requirements for transfer of share. The reporting requirements for the insurer under the transfer of shares are: the insurer who has been granted registration for the transfer of share shall within 30 days at the end of every quarter submit a statement indicating that the changes results in exceeding by 1% of the shareholding of the promoter. Any change that exceeds the shareholding of the promoter to more than 5% will be required to be immediately reported to the authority. The insurer shall file a declaration in respect of a promoter and investor that they meet the fit and proper criteria. Insurance company shall have an obligation to inform the authority if there is non-compliance in regard to the regulations, guidelines or circular framed in respect of the transfer of share. The insurer is required to provide full particulars of any alteration that occurs or is made affects the following matters: any encumbrance created on the promoter shareholding, change of control of the promoter, regulatory or penal action against promoter, any other matter specified by the authority. Now we will discuss what are the actions to be taken against non-compliance. If the transfer of the shares does not take place in accordance with the specified limits, then the authority has the power to take regulatory action against the shareholders. Further, if the transfer takes place above the specified limit and without the prior approval of the authority, the following actions can be taken by the authority. The transferee shall not hold any meeting rights in any of the meetings of the insurance company. The transferee shall immediately dispose of extra shares acquired beyond the specified threshold limit. For more such update, please subscribe to the channel.